I believe it, which is that the film industry as we know it is over. I've been doing this for 35 years. I'm used to doing independent films that get into theatrical, they go to Cannes, they go to the American film market, they get sold pre-sales. That whole market is dead. It's dying. Theaters are dying. Look at the stock price on the theaters have been sinking. It went down 10%, I think, on Monday, just yesterday alone. In my view, the theatrical experience is on its death legs, and because of so many factors, people are shifting to Netflix. They're watching it at home. They're watching it on mobile. They're doing any number of things. It's gone to short form. It's gone to TV. Kids aren't going to theater. So I would tell anyone, get out of doing theatrical films. That's comment number one. Comment number two is, it's going to be a digital world for the next 3 years. That your buyers are all going to be. It's going to be Netflix, Amazon, Facebook, YouTube, Hulu. It's going to be a digital world for 3 years, and I would just absolutely target what they're looking for, whether it's short form, mobile, TV, hour, episodic. Even films. If you do films, I've had clients sell a number of films now to Netflix and Amazon, and that were aiming for theatrical and then just made a U-turn and then got picked up by Netflix. And yes, it's true, like Larry said, there's no back end on these deals, but hey, at least you get out with your skin intact and make a profit on the sale. They're paying serious numbers, big numbers for content. I mean, they just picked up The Irishman, which is a Martin Scorsese, Bob De Niro film. It'll be their biggest budget. So they're swinging for the fences as well. And if you look, for example, like the Blade Runner and why it didn't work, this is totally predictable. It's not the films. It's the medium. Medium is the message. And theatrical just doesn't work. So I'd say aim for digital. And the second thing I'd say is produce anything get into production for VR. Because at the end of 3 years, what's going to happen is that it's going to be a VR world. And the theaters that don't go bankrupt are going to shift to doing VR. And it's going to become location-based virtual reality experience. And there's some out there already that are ahead of the curve. IMAX has already opened a couple of venues. I just read that other theaters are exploring it. You've got The Void that is a VR location-based experience. Dreamscape is a new company that's being formed to do this. So VR. If you want to make money, produce content for VR, because there's going to be an enormous market for it. And then just as a footnote, because it just keeps coming up, this cryptocurrency, other than in unique situations, just stay away from it. It's a fraud. 90% of it is nonsense. There's just this anything that people just hear this word, cryptocurrency, tokens, digital something, Bitcoin, blockchain, and there's this mad rush for it. It's going to collapse, and it's just not going to last. There's no way. I've just seen several proposals on this for financing film, and it's becoming kind of silly. So that's my 2 cents there.
Well, this is going to be an interesting panel because there are people on either side of those sitting here. But I want to hear from Megan next.
I'm going to look at it and talk about it from a different angle, though. I come from Silicon Valley originally. I mean, I literally grew up in and out of Silicon Valley with a dad in the high-tech industry. And I worked as an investment banker when the internet first happened. And I've seen kind of evolutions of funding and trends and companies and interests. When I was talking to a good friend of mine who's a venture capitalist who's funded content and is on the board of companies that are creating content, I was asking him in my relentless way about content and what kind of content Silicon Valley was looking at and how they were going to monetize it. And he got really annoyed with me and he said, Megan, the content doesn't matter. He said, you have to look at the platform. It's not about how you monetize the content and what kind of content can you monetize. It's about what kind of content can support our platforms. And I thought, that's an interesting way of kind of flipping the question. And that's where I'm going to go to what Sky said, where he said it's 3 years of digital and then it's virtual reality. So we're looking at a different experience. When I first saw kind of content tank and and stopped being monetized effectively, it was through the music industry and how they didn't respond to all the sharing that was going on, or the free songs. They kind of just tried to fight it in court, and I remember a lawsuit where they took some single mom to court and she had to pay $200,000, which really didn't go over very well with their audience. But now you look at the music industry and they're actually really innovative. What they've managed to do is they've managed to take an industry where the songs themselves are now songs, no longer albums, so there's less monetization possible. They're still bootlegged and downloaded. I know my daughter does it. But they have these experiences now. How much do we pay for a concert or a festival? How much do we pay for, gosh, Rihanna just came out with a whole line of makeup. So, there they've taken a platform, to use a term, which is that Rihanna, for example, some person who's creating content, and they've turned it into a brand as opposed to just a song and content. So that's what I would say. If you want to make money, first of all, you have to look at what platforms you're effective on. If you can make your own content, put it on YouTube and find a way to monetize it. If Instagram's your thing, any way to build an audience, that's how you monetize.
Seth, I know that you recently authored a very well-received white paper on VR, and I also noticed before you came in that you're also speaking or attending a blockchain conference. I saw a little badge, so I have a feeling you're going to have an interesting point of view on financing in the future of the medium.
Sure, so to start with the exhibition, I mean, I agree. I've been saying the same thing for a long time because having sort of been in the front row for the evolution of DVR and OTT in the TV business, I think it was only a matter of time as consumer electronics devices got better and people consumed more on mobile and tablet and large screen TVs got better, that exhibition were going to be in trouble. There's probably an analogy there to what the music business did, which is they waited too long. But there's other than the scarcity of supply, a movie like Blade Runner that you just can't see anywhere else, really, why go to a theater if you've got a large screen TV? And so I agree, they're going to have to pivot to new experiences. We've been talking about that for probably 15 years. At first it was going to be concerts. I think inevitably it has to be some sort of immersive experience, some sort of location-based VR. And in terms of VR generally, and yeah, that white paper, thanks, like, if you go to VRARproject.com, you can download it. It's the third year I've done it. I started with one of my students at USC, now there are 12 of us on the last one, so this recent one is pretty good. And we're looking to build a community of interesting voices and to have sort of an editorial dialogue on this thing is totally free. So we're funding it. You can download that and read about what's happening in the different areas, but I kind of make an analogy to what happened in the first bubble, which is you had tons and tons of companies, and most of them failed, and then everybody said this whole thing is a fraud, and this is never going to happen. But out of that, you wound up with Google and Amazon and all the big winners, right? So you can make an argument, I think it's pretty strong, in both VR, AR, and blockchain, that you almost have to have a sort of euphoric frenzy to throw enough money and enough water and enough fertilizer on this stuff to figure out what's going to win. And I don't think there's ever been an instance, certainly in media, where you didn't have something like that, where you had a huge field of stuff, most of which turned out to be either fraudulent or crap, in order to create the big winners. So in VR and AR, you'll definitely see that. We can talk more about that if you want. But on the blockchain point, I do think it's going to be tremendously disruptive. One of the places it's going to be really disruptive is traditional venture. And so for those of you who follow it, there are a lot of problems with this ICO economy that we're living with. So briefly, an ICO, an initial coin offering, is a turn of phrase on an IPO, an initial public offering in stock, and it's based on the crowdfunder Kickstarter movement, where essentially people kick into a project believing in it. But the reason that it's gotten so crazy is because those coins, in this case, then trade on an exchange. And so for those of you that followed it, if you bought Ethereum, last July and you sold it in May, you made a tremendous amount of money. So there's a lot of speculation, there's a lot of craziness, but very briefly, there are things about the blockchain that are utterly transformative. And just to use the music example, because it just came up, imagine if every time a song was downloaded or played, instead of having to deal with the performing rights organization with Harry Fox and ASCAP and the labels, and artists having to wait for an interminable series of audits and accounting transactions. What if the money that Larry paid the equivalent of $1 for something? What if there were smart contracts built in software that instantaneously distributed those funds to all the rights holders? So the rights holders immediately got their piece, the performers immediately got their piece, and the more downloads or streams of that piece happened, the more money would flow in, and it would disintermediate a lot of the really inefficient stuff in the middle. So smart contracts are disruptive. The whole notion of a distributed ledger, blockchain grew out of this notion. One of the things it grew out of is this notion that if you actually get involved in Bitcoin, for example, that is just a ledger in the same sense that any accounting ledger exists, where every transaction exists. The difference is that ledger is transparent to the whole world. So any of you can go home and download the entire history of the Bitcoin blockchain to your computer. So in the long run, fraud is dramatically reduced. In the short run, there are going to be a lot of people promoting all sorts of scammy things to try and co-opt the fact that there's all this money flowing into it. But I think the sort of troika, the way I think of it, like VR, AR on the one hand, the blockchain technology on the other, and then eventually AI. For our kids, that's the world they're going to grow up in, period.
Thanks. Ari, you've had a chance to hear some different points of view. I'm curious to hear yours.
Thank you. Well, I really agree with most of the things and the insights shared here today. The truth is that we're living in the most exciting time in human history. We're going through what the World Economic Forum calls the fourth industrial revolution. And what's going to happen is the UN estimates that about a third of all jobs are going to disappear in the next few years. And I think that creates a really exciting opportunity for humanity to move from an economy of workers to creators. So I think that we're going to see a lot more content. We're going to see people really pursuing their creative passions, doing what they love. And I think that the question of how they make money is only a part of it. I think the other side of that equation is really how do they make impact? How do they do something that has a meaningful social and environmental impact as well as a financial sustainable model? And that's the case with this new generation of millennials, of Gen Y, Gen Z. The majority of them want to have an occupation that really aligns with their values, and the same goes with consumers. And I think that that content providers and platforms and distribution channels that acknowledge that and are able to account for that are going to be far more successful in this new economy. I think with that being said, it's really interesting to look at these new funding models. I think that blockchain technology, if I'm imagine, how many of you are familiar with blockchain technology and cryptocurrencies? So about half it looks like. So blockchain technology is the underlying technology of cryptocurrencies and Bitcoin and the like. And there are many scams out there as far as the currencies go. But as far as blockchain technology works, as far as this public ledger, that's just the future of software. That's going to be the future of data rights management, of accounting, of legal, of payment processing. So that's just the way that we're going to be able to distribute content, I believe, and I think the markets are showing right now. But then going a next step beyond that, as far as a way to fund these different projects, that's something that we're looking at with Moeda, which means coin in Portuguese. We're now going to be partnering at the UN Climate Summit in Bonn, COP23 in November, and have an open competition for artists and content providers to create content and create their own new social enterprises to distribute this content for climate action and for sustainable development. So I'm really excited to see what this next generation of social entrepreneurs will create to really prove this new model.
I want you to respond to something involved with blockchain to Sky's comment about the cryptocurrency.
Sure, I'd be happy to. So we, for instance, issued a cryptocurrency, the MDA token. We raised about $20 million in 2 weeks. And this is now, these ICOs have overtaken venture capital funding. There's been over $1 billion year to date in funding for these new startups. So it completely changes the model of these limited partners and general partners and a really consolidated effort. We also see the real lack of diversity in especially Silicon Valley and the venture capital world. The majority of venture capital funding is going to white men. Low single digits are going to women, low single digits are going to minorities. So there's a huge inequity there in the traditional financing world. And this really is now going to be the way that we can have really accountable crowdfunding. And I think that that's what cryptocurrencies are really showing to prove. And of course, there are many scams out there. There are many just bad companies that you shouldn't invest in overall. But I think the underlying blockchain technology is going to be really transformative.
Two entrants